Hi there, welcome to the Alpha Wave Trader market update. This is Murray Dawes here. In this week's update, I won't be making any sort of big statements about where I think the immediate future is heading for the market, because we basically have a situation where the longer term forces, so your quarterly and monthly pivots, that's the buy and sell pivots that I look at, are pointing down. So that's the monthly and quarterly, but the daily and weekly are pointing up. So quite clearly, we've got the shorter term forces are pointing up, but they are heading up into stiff resistance. And this is what I was sort of talking about with you last week. And until we get a situation where the shorter term forces start pointing back down again, you just have to allow that shorter term upside momentum to continue. And when you look at the whole rally from 2009, this is the E-mini S&P 500 on a quarterly basis. Quite clearly, if momentum shifts back to the upside and it really starts to rally, that's going to be a continuation of a very, very strong bull market. But because we have the quarterly sell pivot in place, that is the real line in the sand for me and my model. And this is what we will watch evolve over the next few months, I guess, of whether this quarterly sell pivot, which occurred in December, so it's October, November, December trading, proves to be resistance before we see the market turning down again for another leg to the downside. So based on the theory, it is that until we have a quarterly buy pivot, so until we get a close above the high of that quarterly sell pivot candle, you've got to expect lower prices, and the resistance levels on these candles are really based around the midpoint and the top section of the candle. That's where you're going to find reversals most often occurring. So there is sort of two areas where we can see opportunity, but we still haven't arrived there yet. And with the daily and weekly pivots pointing up, we can expect higher prices. So that's why it's a bit of a waiting game where we are right now, on either seeing if it can rally up towards that midpoint and then create the sell pivot on a daily or weekly basis, which will give me the opportunity to join the move to the downside, or whether it's going to continue to rally. And this is really the spot that I'm most interested in, is up around that top section. That's where you can get some great opportunities. But until we sort of see this play out and we see the shorter term momentum shifting back to the downside in direction of the longer term momentum, and this is where I'm saying that quarterly sell pivot for me is that longer term momentum now, despite the fact that it still looks like it's going up. It's a really good early warning sign, that quarterly pivot, that there may be trouble ahead. And that really is all I'm saying with the ideas behind the buy and sell pivots on the short to long term basis, is that it can't really sell off a long way unless you have a quarterly sell pivot in place, for example. So we couldn't really have the crash unless we started the whole move by breaking back below the low of that highest candle. So here, if you're following all the way along here, there is no quarterly sell pivot until this moment in early '08. and then that was prior to that huge momentum shift to the downside. So we have a similar setup now, and the current rally is still underway. So if we have a look at the weekly chart, for example, and we were looking at this one pretty closely. If you go back and look at a few of my updates from the end of last year, we were looking at this range, and this is what I'll discuss in a minute, is how these ranges develop and the calculations you can make off the ranges to find opportunity. And so in that update at the end of last year, I sort of gave a range of where I thought prices could get to if we broke below January's low and set off all the stop losses. And sure enough, that's exactly what happened, and we got a low which was within 5 or 10 points of the low that I gave, which was just based on a calculation of Fibonacci extension of this pullback. But now that that's occurred, now that we've seen the test of the extremity of where the support is usually found, you can see that we've actually had a weekly buy pivot. So this is the point here, is that we've got a new low created a few weeks ago. There's the high of that low there. Then we've got the close above the high of that candle, which is then the confirmation of a weekly buy pivot. So that's the shift in momentum for me, and you can see the next week it's rallied. So for the moment, the short-term momentum is going up into long-term resistance. So from here, what I really need to see is a move up into this stiff resistance, and this area being the sell zone of the whole wave higher from 2016, and then to see the weekly sell pivot. So we need to see it turning back down, the momentum turning back down. So if we have rally up into this area, and it might take a few months or weeks, whatever, and then we get the confirmation of a shift in momentum to the downside, and then we can start looking at taking advantage of getting short, for example, into strength. So you'll be selling after this big rally, and you're selling in what is a strong resistance zone, which would also be in line with the current sell-off. So we have this wave structure here, and prices always tend to rally back into the sell zone of each successive wave, and that's where you find the best opportunities. So that is where there is going to be some fantastic opportunities. But where we are right now, it is a potential resistance zone, but the momentum is still to the upside. So you have to wait and see that the selling pressure is there, and once you've got the confirmation, if the market does just turn straight back down from here in line with this current weekly downtrend, we do get a confirmation of a weekly sell pivot, let's say this week, well, then I can start making my calculations off that for where I want to get short. But until you get that confirmation, you just have to allow, you're either going with this short-term momentum, looking for good opportunities to buy it, trying to just capture a move. It's a pretty risky situation to be trying to buy this, because how much upside do you have before the potential of those longer-term selling forces from the quarterly sell pivot coming in. But really, that's all you can be doing, is trying to buy this, because this rally could end up taking off again. So you've just got to be in line with the momentum, and what you want is the short-term momentum being in line with that longer-term downtrend. So if we've got the quarterly and weekly pivots saying down, we then want the confirmation on that short term that it's saying yes, the short-term momentum is shifting down. Then you've got the potential of great opportunity. But while the signals are conflicting, it's just not the time to be trading. You're just now waiting for that short-term momentum to agree with the longer-term momentum, and that will come. But I just don't need to be making any big statements while you've got that conflicting situation in place. So I just wanted to finish up with just a little bit of theory, because I couldn't give you too much as far as where the market is right now. It's a bit of a waiting game for us. So I just wanted to quickly cover off the distributions of price. I wanted you to understand, if you haven't been following along or seen any of my articles, it's very important that you sort of do understand this idea of how these ranges develop and the fact that you can make calculations off them to look for opportunity. And the key thing is, if we've got a trend occurring, the market, for example, rallying, and we get enough selling forces to create a sizable reaction, the market will often trade off the calculations made off that initial range of the pullback. And the way I'd like you to think of it is that the midpoint of that range, which we call the point of control, is like a gravitational point, that while the market is in a state of indecision, there'll often be a lot of trading around that point where prices will try to break away, but will keep trading back to that midpoint, and then eventually, after short-term traders are fatigued, the market will make its decision one way or the other on which way it's going to go. But the evolution of these structures is quite interesting when you start to understand that you can make calculations off that initial range to look for opportunity. And the key thing that I guess I want to point out is that there are ratios related to that range on extensions. So when the market breaks out of the range, it can feel like it's breaking out to the upside or whatever, but often you get a series of false breaks where prices tend to look like they're taking off, and traders will buy the breakout, but then prices fail to carry on, and you have a false break of the high, and prices tend to move straight back to that point of control. And conversely, on the other side, it'll sell off past that low. A lot of people who are buying in this range will have the stop loss below that low, so they'll get taken out of their position, and people who are bearish will sell the break lower, but then that selling is soaked up, and all of a sudden it returns, has a false break of the extremity of that range, and will tend to head back to that midpoint again for mean reversion. And it is the development of this and understanding that it does take place that can create opportunity. So there's also this relationship between how far prices break out outside those ranges and where you can expect to find support. And as I've shown you before, once that range is developed, I will actually make a calculation off that range and look at the 618 extension outside that range as a point where you often find and that will be a 618, above that range. And you'll just find over and over again, when it does have a big break, that will be where prices can find big support. And it looks like this range is completely broken when it gets down there. And this is one of those tricky little things that can really help you out. So, for example, if I have a quick look at the S&P 500, if we look at this big rally to the upside, here's the reaction where the selling forces were large enough to create a sizable reaction. And so I have that midpoint, point of control, as a gravitational point. I have the 25% outside and the 618 outside as areas where the market will often reverse from. And I also have the areas inside the range, which I call the buy and sell zone, and that is from the you can say 12.5% to 25%, and sort of 75 to 87.5%, and that is the area where you often find reversals as well within the range. So you can see this is a year's worth of trading here, since January last year. And the fact that you can make calculations of this initial sell-off, which can help to explain all of this price action that's happened since, I hope you can understand that can be pretty useful information. You can see here prices reversed off the sell zone there. Prices found support in the buy zone, went straight back to the middle, went back to the buy zone again, straight back to the middle. Sell zone here, just touched back to the middle. Then we did end up having a bit of a rally, which was a false break, and again, this is when people get bullish on the breakout. Got to a level nearly 25% above, and once it failed to carry on with it and broke below that high, re-entered the distribution, you can see we had a very sharp move which went straight to the point of control. And then from there we've had a rally to the sell zone, point of control, to buy zone, point of control, sell zone, point of control, near the buy zone, point of control, sell zone, point of control, and then it cracked. And once it did crack, there was a lot of stop losses in this area. Where do prices go to? Look at that. The 618 below was within about 5 points of where prices got to, and I gave you that range prior to Christmas of where I thought prices could get to, and that was when prices were up here. So hopefully an understanding of how these distributions form and being able to make calculations off the past to help you discover areas where markets often reverse from can be just very useful information. So that's my little bit of education for the day. Hopefully that's added a bit of value, since the initial analysis of the market was that we're in no man's land. I'll come back with more next week. Cheers.